Hello, welcome to the video. My name is Monty, and today we're going to be discussing how you can get started trading. Now, by the end of this video, you guys are going to have the necessary knowledge to get started. This is not going to get you guys into trading today, but this is going to get you started doing your research, having an idea what it is and what to expect. Now, before we get into that, I want to talk about how I got into it. And quite honestly, it was probably the most randomest encounter ever. Now, I was looking up research on how to invest, right? Like doing long-term investments like REITs, real estate, like long-term stocks, cryptos, and etc. And then I developed like the conception of day trading is horrible. Like it's gambling, it's a scam, it's not real, it's not possible. You can't do it until I started doing the research, right? You got famous day traders from since the 80s, like Mark Douglas, and just to name one of them. I can't even name the rest of them. But it, I got shown that it was possible. And probably when that reality hit was when I saw, I think there was like at least 5 different channels I saw. I saw like Swing Trading Lab, Shinobi Signals. That was 2. I think Lambo Raw was one of them too. Mamba FX is another one. But I just saw these content creators, whether they're gurus or not, fake or legit. I believe that there was something valid there, and I started taking trades that they would take, and following their instruction, and I realized like, wow, this is possible. So then began my journey. 2 years in, I'm becoming profitable, and at this point, I started to look back like, this is stuff I wish I would have known. So, with that being said, this is going to be all the information that I wish I knew starting out, or at least information that would have made my research struggle a lot quicker, right? So, for one, be curious. You got to open that rabbit hole. I know I spelled rabbit wrong, but there's a reason why I'm not in college. So, but you have to get started. That's the only way you're going to learn. And if you're that person that's like, hey, I'll get to it later, you got to cut that out. Like now is the time to start. Now, I have a bunch of stuff on my screen. It's not organized, but I promise you there's a lot of value in this. So you first got to do your research. I can't cover everything in this video here, but I'll tell you, if you start looking up all these different words right here, you're going to open up that rabbit hole and you're going to get flooded with information. It's just going to come right to you. It's literally going to be your calling. So first, let's discuss Forex. So Forex is my bread and butter. That's what I've been doing for the last 2 years, almost 3 now. Forex is literally it's an acronym for the foreign exchange market, right? Those are 2 currencies against each other. So you can look right here, USD JPY, USD CAD, GBP CAD. All these are currencies against each other, and this one's gold. That's commodity. It usually gets lumped in with Forex. But to back on track, USD JPY, that is literally the US dollar and the yen. If you zoom in right there, you can see that it's the currency against the currency. Now the slash mark is literally a division mark, or the division sign. So USD divided by the yen, and you get that contract rate. And as that goes down, if it goes down, the US dollar is getting weaker. If it goes up, the US dollar is getting stronger, or vice versa. If the yen's getting stronger, that market's going down. If the US dollar is weakening, then this market's going down, right? So that's how that works. I highly suggest doing more research on that. I'm not going to be able to give you the best explanation. It's just a market that I trade, right? And there's other ones too. There's indexes, stocks, commodities, and crypto. But the thing that matters is you do your research and you try to understand it and how it works. So to the next thing, we need to talk about pips and ticks. I can't really speak for ticks because that's usually for indexes and stocks, and I believe crypto too, but I'm not entirely sure. But that is a unit of measure. Now, for pips, I can talk about all day long. Pips are the unit of measure in Forex, right? So if I were to get this little tool right here, and by the way, we'll talk about this platform that I'm using because that's very crucial. But if I were to measure this move, if you notice the number 152.8, that is 152 pips. So that is literally your unit of measure for Forex. The platform that I'm on, this is crucial. That you're going to need this along with a broker. This is called TradingView. TradingView is literally your draft plan for your trading strategy and your chart ups. So when you're playing a football game or soccer game, you're always going to have your plays. You're going to have your playbook. This is where you get your playbook. This is how you learn how to trade, and I highly recommend this. Download on your phone, download on your computer. I highly recommend your computer versus your phone because you got the nice wide screen. You want to have the details. So, along with tools such as TradingView, now we got to discuss brokers, right? So, there's a specific reason why I have regulated brokers, but we'll get into that in a minute. So, let's talk about brokers. So, brokers is what actually connects you to the market. And there's good brokers, bad brokers, mad brokers, and so on and so forth. What you want is a broker that is reliable. So that's why I'm going to suggest you a regulated broker. Now, I can only speak for Forex because that's what I've been doing for the last 2 years. Now, Forex.com, obviously, Forex.com, and then Oanda. So these two have been in the markets for a very long time. They are regulated by multiple governing bodies. Your money is going to be pretty much protected there. There's no way you can over leverage your money. There's no they'll only let you put down 1% to 2%. With unregulated brokers, there's no regulating bodies over them, so they can pretty much do whatever they want. You can literally risk all your money in one trade if you wanted to with them. But with them being unregulated, you may not get your money back. But that's another topic for another day. I highly recommend only sticking to regulated brokers, just because the intended audience of this video is likely to be somebody new. Now, the next important thing is everybody's going to be screaming about is strategies. I want the strategy. How do you make the money? And I'm going to tell you the reality. The reality is there is no one winning strategy. There's only winning traders. So what does that mean? A winning trader has these three things here. You don't even need the strategy. You just need these three things here. So what does that mean? That means you can have any strategy and have a horrible win rate and still be profitable if you're applying these three things. So to further enlighten you on that, you can't just go from strategy to strategy to strategy, jumping around. That is inconsistent. That's what I did in my first year because I suddenly lost. I'm like, oh no, the strategy doesn't work. When the reality was, I had a really good strategy. And that's how I lost pretty much all my personal capital. It's because I was jumping around. And I lacked that discipline and I lacked risk management. I was over leveraging. I was putting down way too much money, like 10, 20%. It's also why I don't recommend unregulated brokers because you give into that temptation of greed. Now, when it comes to strategies, what I highly recommend is something that you understand and something you can apply consistently. For me, I like supply and demand with confluences. You can be a trader that trades only price action. You can be a trader that does, focus on liquidity concepts, SMT concepts, or you can be a trader that use order flow. There's all these different ways of making money, or you can combine all of them together somehow. And that's kind of what I did. I combined price action with supply and demand. More so now, I'm more focusing on supply and demand because that's so much cleaner. But I just threw all those different terms, and those terms right there, all you have to do is look it up. Information's out there, it's all free. You don't have to spend thousands and thousands of dollars on a guru because all they're doing is trying to get your money and, profit off of that, right? So now let's talk about swing trading, day trading, and scalp trading. So I'm sure you've seen those words before, but if you're ever on Instagram or YouTube, they're gonna say, "Oh, swing trading, like what is that?" Like it's all time duration. Swing trading is when you're holding a position for days to weeks, right? So this is 1 week, this is the second week, third week, fourth week, fifth week. It took you 5 weeks and you're anticipating this move, and then you're in this trade for several weeks. That is swing trading. Day trading is, 4 hours to a day. So this is 4 hours, 8 hours, 12 hours, 16 hours, 20 hours. Okay, now 4 hours, 8 hours, 12 hours. Boom, you're in this trade for 12 hours. That is day trading, right? Or if you were to hold this position for much longer, then this would be over a day. So that is day trading. Scalp trading is minutes to hours. That's what I do. I like to scalp. I don't like to being in the market for too long. I want to be in and out. So this would be like 15 minutes, 30 minutes, 45 minutes, an hour, 15, boom, 15 minutes, 30, 45, boom, out. Now, that is going to be dependent on your needs, right? So, and your strategy too. It's going to be dependent on your needs. And there's other things to account for, like trading sessions and whatnot. I highly recommend doing your research on that. But there's no one way to make money off the market. There's multiple ways. All you got to do is choose one, because you have to be consistent to your process. You have to be disciplined, and you have to apply risk management. You have to give your process a chance, because chances are you're going to lose a lot. But you have to master losing before you can start winning. Once you figure out how to lose, it's going to be easier to figure out how to win, because you start avoiding losses. And even then, too, you can be profitable with the 50% win rate. This one right here has the 50% win rate, and this one does not. This one has a little over. But think of Warren Buffett. I forgot where I saw it, but Warren Buffett literally has about like a 38% win rate with all of his investments throughout his life. 38%. That is a crazy number. And to think of how rich he is, that kind of shows you that you don't need a 50% win rate. You don't have to be winning all the time to be profitable. So, for example, right, this is called risk to reward. That is going to be a very crucial thing when you're starting out in trading, is targeting at least a 1 to 2. This will guarantee profitability. Anything higher, better, but that's the game of statistics there, and we won't get into that in this video. So if you want to pause and look at the numbers here, go for it, or punch in your calculator, go for it. Now, what appealed to me when what got me into trading? Like, what screamed to me like, this is what I want to do? And somebody made this analogy. Would you rather make 5% a year, which, if you're already a millionaire, perfect, but chances are you're not, versus trading, you can make 1 to 2% in a day. There is 365 days in a year, and you can make 1% per day, if possible. I'm taking that. So that's all the time I had today. So if you guys found this video helpful, let me know in the comments below. You can thumbs up, share it. Also, I do have a Instagram. I do post there daily, and I also have a Telegram group, which I can show you guys right here. I do post signals I do post updates, market updates, and exclusive classes. I did drop an exclusive class today. We have. I'm transparent about everything. Literally, we had a trade that hit 1 to 2. So if you guys want to join, the link is going to be in the description. Anyways, I hope you guys have a great day. Adios.